Hello guys, good morning. As usual, I smile or I laugh when I always receive such emails like, "Oh, I bought a stock and I put stop loss and I get stopped out from the stock." Okay? Now, what do you want? It means, do you want that whatever you buy, it goes up and it never go down? So here, if you have this idea of a sure thing, you want always to buy a stock, it goes up. And you make money. And you want to make a lot of money each time. Because in your mind, you have certain expectations. Okay? You want to force the market to give you money. You can't force the market to give you money. The market gives you the money when you are right. Okay? When you are wrong, it takes some money from your position. Now, if the market wants to take position, to take some money from your position, he always asks you your permission. Okay? Now, what is this permission they ask you? It's your stop loss. Because when you put stop loss, you want to give the market what you want to give. Okay? No one obliges you to give 50% of your money in a trade to the market. Okay? But you can give whatever. You can give all your money to the market, and the market, he will take that. So understand that when you buy a stock, it goes up, it goes down. It's probabilities. Okay? So you ask me, if I buy a stock and it goes down and I do it again and it goes down, I do it again, it goes down, so I begin losing money. Okay? So what should I do? What you should do is that you should learn how to trade. It's very simple. You should spend some money on your education. There is no a shortcut. If you are going online for free, for example, in my channel, I give 10% of my knowledge for the general public. Okay? The ideas that I give are what I use. But the details, I will not give you the details because it costs money. Okay? A lot of people, they doubt when using stop loss. They say, "Oh, I use stop loss, it goes down." Okay. So instead of losing certain time, certain kind of money that you allow the market to take, now, if you don't put stop loss, what do you ask the market? You say to the market, "Please, Mr. Market, I buy this stock. If you want to take 10%, 20%, 30%, or 50% of this stock, pop, just go and take it. I am okay." Now the market, many times, he give you favors. You see that many times you don't do stop loss, and the stock goes down a little bit, 1 day, 2, 3 days, and then it goes up, and then 1 time, 2 times you make money, and you are happy. You say, "Oh, this stop loss is just a bad idea, so I will never put stop loss." Okay, but one day the stock market is mad at everyone. Now, when the stock market is mad, it means it is volatile. One day is going up very, very much. One day is going very, very down. What does it do? If you allow him to take certain percentage or certain money from your position and you exit, you are okay. But those who allow the market to take money freely, unlimited, means you have your position, you put $2,000 or $10,000, $20,000, $100,000 in a position, wherever you put. It means here I'm speaking about small accounts, I'm speaking about bigger accounts. Okay? Whatever you put in a position. And when the market is mad, what does it do? It takes what it takes. You don't know, and you don't know what will take. And there is no way to know. Okay? There is no way to know how much the market, when it is mad, what it takes. Because you allow this. You allow him and you say free. It's like, in order to make it clear for you, because there are some people who don't understand when the market is taking their money because it's virtual. He doesn't understand. So I will make an example. Someone comes to your home, okay, to fix something in the home, to fix the door, or to fix the window, or to fix the heater system, or wherever you want to fix in the home. Okay? He comes, he fixes everything, and the job is done. And you give him a check, and you sign it, and you say to the guy, please put in a number that you like. Okay. Oh, you told me, oh, no way. How can I give him a check signed and they say take whatever he wants? He can take 1,000, 2,000, 5,000, and I will have a problem. And what he does, okay, I pay him $100, $200, $500, depending on the thing that he is working on, and he fixed that. So why here in real life you are scared to give a blank check to someone signed? Why? Why are you scared? Because you know that this guy, he can put $1,000 and his pay is only $200. But you ask him to take whatever money he wants. No, you know, people are greedy. Okay? This is the nature of people. And he knows that his job is just $200, but you ask him to take wherever, and he thinks that maybe you have money and you don't need it. It's like a form of charity or something. And he takes $1,000. Now, in the market, excuse me, one thing. In the market, or in the stock market, it's the same. When you buy a stock, it is as if you ask the market to do something for you. Okay? And you want to pay. If you don't put stop loss, if you don't say to the market, okay, Mr. Market, I am buying 100 shares of this stock, which is $50. If I am right and the stock going up, I am right. I need money. But you can't tell the market how much money you need. The market will give you as a reward whatever he wants. He can give you 5%, 10%, 20%, 100%, 200%, depending on how long you stay and depending on the stock. Okay? Now, you say to the market, if I am wrong, I will give you $100. That's it. Or $200. This is my stop loss. This is when I write the check, I sign the check and I write the number. Because in business of trading, you should know what is your expense. Okay? You are doing a business or you are doing entertainment. Okay, you should differentiate between these two things that you are doing in your life. If you come to do trading as a business, you should calculate everything you spend. Stop loss is one of the most expensive expenses, so you should try to calculate how much you give to the market. Doesn't hurt you. Okay, doesn't hurt you because you are wrong. This is how the play or the game is played. Either you play the game right, or the market will take your money, okay, and he will never tell you thank you. Some people, they lose 50%, 70%, 3%, 20%, 90% in a trade. It's a big loss. And you don't understand that the market, when he takes your money, it's forever. Okay? And whenever he takes too much, you will have a problem because you lose too much money. It's like, I give you another example, and this example is the same as the other example that I gave you in the house. If you are working outside, like you are working, and you cut your arm, and blood is coming out. You know that blood is very important to your survival. If you are bleeding a lot and you don't stop it, you will faint and maybe you die. So you understand, when you see the blood, the one time you see the blood, you try just to stop it. Now this is a natural thing. Now in the market, why you don't do that? You see the market is taking your money, 2%, 5%, 10%, 20%, you are staying. Why you stay? Oh, this stock will go up, I know. Who tells you? Who tells you that the market will go up for this stock? Who? So this is a common sense strategy. That's why I told you always that trading is math. It's not magic. You don't see the stars in order to know which stock is going up. Between the stars, magicians, voodoo guys, or wherever you want to do, or a guru, financial advisor, he will never tells you what will happen in the future, because all of us, the future is hidden from us. We will live in the moment that we are in. After a few minutes, we don't know. After a few minutes, maybe we have earthquake, maybe we have war, maybe we have a big disease spread. We don't know what will happen. Some people die in 1 second. So the only thing that you have is the moment that you are in now. And we know the past because you can see the charts, you can see the past. Okay, because it is the past. But the future, no one knows the future, even by predicting. Okay, some people, they say, oh, I can predict very well, 90%, all my stocks are good. Okay. Why you are not like Warren Buffett or more if you have 90% or 95% of your all stocks go up, you will be a billionaire in 1 year. But you don't, because the number of this ratio of winners versus losers is a false idea. I explained this in other videos. It's a false idea. I can make 20 losses, but I make one winner, and this winner make me money and cover my losses. This is trading. So the number of winners and losers, take it from your mind. It's a false idea, and I have a proof of this, and I will show you. So these things that I am explaining, they are very simple things and common sense. If you take it in common sense, in logic, because all are derived from math. Okay? Logic. 1 + 1 = 2. There is no, in the future, 1 + 1 = 3 or = 0. There is no. This is math. It doesn't change. That's why we can make a better word, because of math. Okay? So the whole idea that I'm trying to say is that don't be scared to lose little money or some money in a trade, or 2 or 3 or 4 or 10. Don't be scared. It's the game. If you feel that you are not okay to lose such money, so in your psychology, you are not a person to trade. Trading is not your thing. So change your business to another thing that you control more. I give you an example. Let's say, because I give these examples because a lot of people, it's common sense. You can understand that. If you want to buy a car and to sell it for a profit, you should go online and check what is the price of a car, a model, a year, a make of a car, and you see how much it costs outside, online. And then you go to an auction, for example, and you get it less, because you know the value of the car if you want to sell it. But in order to make a profit, you should buy it lower. Okay, let's say the car is sold for 5,000, and you find it with 3,000 in an auction. You buy it and then you sell it outside. You will make a profit for sure. Why? Because you know the value. Now, the problem in the stock market, as I explained before, the value of the stock is what you see. There is no it's cheap or it's expensive. There is no this idea. And people, they want to make you think that because of some indicators, oh, it's overbought, it's oversold, it is cheap, it is expensive, it is too high. There is no such thing. Google, for example, was 100 and it goes to 1100. Now when it is 100, some people think it's a lot, it's too high, but it goes to 1100. Okay, I showed you another stock 2 years ago. It was $3. Now it is $245 in 2 years, from $3 to $245. I have traded this stock for 3 days only, and I get 33% on these 3 days, and then I stop it because I forgot about it, because I change the stocks always. So I don't come that much to my stocks because I change them always. Okay? So there is no such thing as expensive or cheap, or there is no. The price that you see online is the actual price, and this is the real price. So this, I make you try to understand the basics of trading. No one knows if the stock will go up or go down. Now there are some strategies, okay, that chooses where and when to enter a stock. This is what I do. This is what all the people do in swing trading, in day trading, in almost trading, not investing. Okay, even investing, I can use my strategy and it can give me the best of the best. Now why? Because it's just a way to enter a stock, to buy it on a certain time, okay, in a certain price. And this is what I always explain. But understand that I can't give you all the information of my strategy, although I give you 10% of it. So because a lot of people, they understand what I am doing, they don't know just the details. Okay, that's it. So don't be scared to lose certain money, and try, when you have this account, trading account, if you have just 1,000, 2,000, it's just a small account, make it as a training account. Don't think that you can make too much money or a lot of money from this account. Make it as a training, and you save more money for the bigger things. Because in order to make money, you should have money. No one will fool you with this. 1,000, 2,000 to become a millionaire. This, if you follow this kind of gambling, just go there and do whatever you want. And good luck. Okay? Good luck with what you do. But for me, and for the other guys who are following me, or following other people who have the same common sense and logic, you are doing a business. Okay? Don't expect too much. So it should be year by year, and you grow your account, you grow your money, you grow your understanding of the market. This is how the business is done. It's not you have 1,000, 2,000, next year you will have $1 million. This is, I'm not saying stupid, but it's like a gambling mind. You want too much from too little. And this is against logic, against common sense, against business rules. Okay? Don't expect too much, because when you expect too much, you will be stressed out. You will be stressed. You go someone online, you say, oh, I do a trade, I have 500%, I have 1000%. You think that these people are true, they are making this money. They are not making any money. Okay? These people are not making money. They tell you this in order that you follow whatever they sell you. That's it. Okay? So, using common sense, you mean using logic, using math. You will be apt to succeed in trading, and believe me, you will become professional trader in a few years if you continue to learn about trading as a business and forget about all the other ideas that they will stop you from growing. Because some people who think trading is a gambling, they're always in the first level of knowledge about stock market. So they stay there for 10 years, 20 years or 30 years or all their life. I don't understand. Some people, they call me, they say, okay, I've been trading for 20 years and I'm not making money. I say yes. Why you should make money? Because you are doing the same thing. How can you make money? You make money when you change your ideas first. You have some ideas that are false about the market, about trading. If you change those, your results will change because you change. Okay? No one will teach you and for free like this, and you become successful. And you should do it by yourself. It's something that you should do. It's a business. You should run your business by yourself. No one will run your business and you will become successful and for free. No one will do that for you. Okay? If you, for example, you have a business and you are successful, you are not going to take any stranger and to make him do the same as you and to be a competitor in your area. You can't, because you understand business. So why you think that other people will do this for you? Never. Okay. So the thing about this video today is just to mention again and again and again that a stock, when you buy it, it can go down. It's a probability. So don't be frustrated. You should put stop loss, not to lose too much, and you continue trading. And believe me, you will succeed one day if you continue what you are doing and you continue to learn new things each time. Thank you very much and have a nice day.